Stocks recover after an early dip in a volatile trade, with frontline stocks outperforming the mid-caps. Energy as well as financials eke out gains, while metals and real estate drag.
Reliance Industries becomes the first Indian company with a market capitalization of 20 lakh crores. The feat almost ties it at the 43rd place with Netflix in the global market cap sweepstakes.
The Hindalco stock slumps after overseas arm Novelis significantly expands its capex plan to $4 billion and pushes back the project completion timeline.
Paytm skids as uncertainty lingers ahead of the February 29th deadline. Axis Bank says they are happy to support Paytm's customers but would like RBI's blessings on the way forward. Meanwhile, brokerage Macquarie trims its business expectation and valuation.
Axis Bank MD and CEO Amitabh Chaudhary tells CNBC-TV18 that credit growth can't sustain if deposit accretion does not pick up. He also sees reasons for margins to compress and credit costs to move up. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar, and as always with me is Pavitra Parekh. So Pavitra, lots happening in the market when it comes to stock-specific movements. Yeah. And the market is really punishing some of the concerns coming out in earnings as well as expansion plans. And we have seen the scene with Paytm as well. So let's take a look at what the overall market trend is. Nifty 50 at the moment during lunch hour is losing some steam, gains of about close to 0.5% in trade. When we look at the other indices, Sensex is gaining less than 400 points at the moment. Bank Nifty is showing good performance today, 0.87% up in trade. And it's the mid-cap universe, which is a spot of weakness today, in the red but with minor cuts at the moment. So advanced decline ratio, because of broader market being on the weaker side, is in favor of the declines. But some of the counters, and I must mention that in terms of the key draggers, in terms of percentage falls on Nifty 50 companies, well, Aditya Birla Group companies led by Hindalco and then also Grasim and Ultratech are the key underperformers. While on the flip side, Coal India is one of the biggest gainers in terms of percentage, over 4% up in trade. And of course, Reliance Industries makes another record. But keep an eye out on Paytm and the various news events around it. Pavitra.
Oh, absolutely. By the way, I just want to point out that trading at MCX has begun. It was supposed to start at 9 o'clock as usual, which was then pushed to 11 and then to 1 because of a technical glitch that they were facing. And they were, of course, working with TCS to try and solve that. But it looks like things have now started for MCX in terms of the trading action. For the market, it has already been a wild day, right? We've seen volatile action. We got that early morning dip that came through. From that level, there's been a 170-point recovery on the Nifty where we stand right now. The mid-cap index has recovered 600 points, and the banks have also had quite the morning. So in terms of, a lot of the stock moves, you are seeing that a lot of the stocks are really moving on earnings. In terms of the sectoral losers, it is the metals pack and realty which are coming in for some cuts. And it's good to see that the PSUs have bounced back after what we saw yesterday in terms of, the shakeout. The broader market is still struggling quite a bit. So you have the mid-cap, small-cap still suffering. The small-cap index, after the 4% fall yesterday, is now down almost 0.8%, even after that recovery that has come through. So we'll talk more about the stock-specific moves that we're seeing and what's really going on. But first up, let's kickstart the show by talking about Reliance Industries, which has become the first Indian company with a market capitalization of 20 lakh crores. Sonal joins us with all of the details. Sonal, quite the milestone.
It is a huge milestone because it is the first company, that is Reliance Industries, to hit that 20 lakh crore market capitalization. So that says a lot about the stock moves that we've seen in last couple of trading sessions as well. Now remember, this is coming in just after the stock touched that 19 lakh crore mark. This is on 29 Jan of 2024, so just a few days ago. In terms of the stock move, it is up 14% year to date. In the last 1 year, it has returned 27% to its shareholders. And in the last 5 years, there's been a gain of around 140%. 40%. In last 2-3 trading sessions, we have been seeing a one-way move here. In terms of what the brokerage or the street makes of it, around 80% of the street has a buy rating in terms of brokerages. 14% have a hold rating, that is around 5 brokerages, and only 5 or 6% they have a sell, that is around 2 brokerages. The target price, I'm just talking about few of the MNC brokerages here. Nomura has a target price at 3,175. We have Morgan Stanley, which is at 3,046. Centrum and Motilal Oswal, the domestic brokerages, have it between 3,100 to 3,300. JP Morgan, Citi and Bernstein anywhere between 29.10 to around 3,100 rupees in terms of the target price. The market cap is close to $240 billion. It is 43rd globally in terms of market cap ranking, and this is the first Indian company, of course, to reach those levels as well. Now, for reference, if we look at the global companies, that list will also come up for you on the screen. Microsoft is the highest in terms of market cap, the biggest there, followed by Apple, there's Saudi Aramco, Alphabet, Amazon, Nvidia and Meta. These are the other ones. Now, why is the street so bullish on it? What could the possible triggers be going forward? We are talking about stock moves, but what next? In terms of triggers, Bernstein says there are several key catalysts going forward. First is the additional spin-offs, which is expected post in the general elections. There would be increase in telecom tariff rates, which would be good for the Jio business. New announcement on the new energy business, that is a big trigger. And also improvement in free cash flows as capex cycle turns post the 5G build out as well. Some of the other ones in terms of what Morgan Stanley is saying, their investment cycle is turning. They will see 2 to 3 times value on their investment cycle. Citi says the key triggers would be surprises magnitude of tariff hikes, Jio retail monetization updates and deleveraging ahead. So these are a couple of triggers we should be watching out for when it comes to Reliance Industries.
That's right, Sonal. Thanks for accounting all of that for us. And I'll just make one more addition to that particular list. Of course, it's a sentiment booster, not as much in the larger scheme of things for balance sheet, but also reports have suggested that the Disney deal could be going through very soon. So let's keep an eye out on Reliance Industries. Let's throw the spotlight on another company, which is a top Nifty loser this morning, and Hindalco is sliding in trade after Novelis reported its third quarter earnings. Nigel is here to explain what has really disappointed the street so much, Nigel.
Well, all eyes were on Novelis' numbers, right, Nisha? And in fact, the numbers didn't disappoint at all. It was bang in line with what the street was working with. The adjusted EBITDA per ton came in at around $500 per ton, and the guidance was quite positive. They are guiding that in quarter 4, that from $500 per ton, it goes to around $525 per ton. And in the time to come, it moves to around $600 per ton. So no worries on that front. The debt went up marginally by around $200 million, but you'll say that's par for the course because they have a capex plan that's underway. The problem, though, was that they are setting up a 600,000 ton unit in the United States of America. And earlier, they'd guided for a capex of around $2.5 billion. The problem is now that's been upscaled to around $4.1 billion. That's not all. The timeline as well for commissioning has been pushed a little bit. So both these two factors are weighing on the stock. And I'll tell you what, the street has no room for disappointment if you're going to be guiding for higher capex plans. Clearly, the street gets very, very skittish on that. And that's what's playing out on the stock, and that's what's weighing out on the stock. What do brokerages make of it? Equirus, well, they continue to have a buy rating target price of around 570 rupees, but they highlighted because this capex plan has got upsized. Now the return ratios or the IRR is likely to come down to around 10 to 12% from around 17 to 19% earlier. Jefferies, they maintain their positive rating on the stock, target price of more than 700 rupees, but they'll review it post the India numbers that will be out in the next 90 minutes or so. And finally, InCred is saying, well, the stock could dip because of the capex plan, but look to buy it. So that's the counter view that's coming in for InCred. Short point is there's no margin for error when you're going for higher capex. And today, in fact, they've announced a capex plan of around $1.5 billion. They've upscaled it by that. And the stock has lost closer on the market capitalization is closer on $2 billion. So that's how severe the street takes this sort of news spaces. Back to you guys.
All right. And you'd warned us about this, Nigel, in the morning as well. So thanks a lot for taking us through all of the details there. But moving on now to the next stock, which was, of course, seen big interest. This is shares of Paytm, which continue to trade under pressure after the stock sees a big downgrade from Macquarie. Now, Macquarie has slashed the target price for the stock from 650 rupees per piece to 275 rupees a share. Macquarie notes that Paytm now faces a serious risk of customer exodus and mentioned that channel checks have also indicated some lending partners have revealed that they are looking at their relationship with the company. Earlier today, we spoke to Macquarie's banking analyst Suresh Ganpati on the rationale behind this big downgrade. Listen in to what he had to tell us.
Their ability to monetize the data comes into serious question, right? The feedback that we have got is that they are curtailing business. One lender, which is of course there in the public domain, and which is there in the latest analyst conference calls, is also Aditya Birla Capital having cut down their exposure significantly to Paytm. So my point here is that if at all the lenders decide to go back on cutting down their exposures to Paytm, then clearly the business model is in question, because that's the biggest profitable business for them.
All right, so that was about Paytm stock, and no respite in sight at the moment. But Borosil, that has seen a sharp surge in trade after the results have been announced. And remember, the revenues have jumped up by 46% for the company, and the profits of the company have more than doubled on a YOY comparison. So keep that on your radar. Moving on to an important opinion coming in from Axis Bank's MD and CEO Amitabh Chaudhary on credit growth, deposit growth, as well as the trajectory for net interest margin going forward. Take a listen.
You cannot sustain a credit growth without deposits backing it up, the right kind of deposits. Otherwise, you'll, be destroying or changing the nature of your balance sheet over a period of time, which will not be the right thing in the long run. So my view is that the deposit and the credit growth has to converge. But if we were to assume deposit growth is going to remain constrained and competitive intensity on the credit growth is not going to reduce or not going to reduce enough, it does mean that the NIMs could continue to remain under pressure. Now, every bank's its balance sheet, its mix is different. They have their own set of factors which will determine how their NIMs move. But yes, in the short term, NIMs could be under pressure because of what is going on in the market.
All right, that is the word coming in from Amitabh Chaudhary. But with that, we're going to get into a short break now. On the other side, Vedanta Aluminium's India's largest aluminium smelter plant is looking to become self-sufficient. So we're going to bring you more on this in just a bit. Hey guys, welcome back. You're still tuned into Business Lunch. Now, Vedanta Aluminium is looking to soon become self-sufficient in alumina. This is thanks to the backward integration exercise, which it is very close to completing at its aluminium plant in Odisha. So, CNBC-TV18's Abhimanyu Sharma reports that the company is not only targeting cheaper aluminium production, but also more direct connect with clients. Take a look.
This is Vedanta Aluminium's Jharsuguda facility in Odisha. It is India's largest aluminium smelter plant and one of the largest single-location aluminium plants in the world with a smelting capacity of 1.8 million tons per annum. It harnesses an associated thermal power capacity of 3,615 megawatts. It is the only Indian smelter in the global 1 million ton production and export club, and the company currently commands a 40% market share in India's aluminium industry. But the company wants more. One part of its two-pronged growth strategy hinges on a backward integration exercise at its plant aimed at cutting costs.
Q3, we were at $21.50 per ton. Last quarter, we were at $17.35. So as you can see, a significant reduction in cost. The backwards integration, the structural change in cost that we are delivering through that will see dramatic further reduction in cost. We're working on operational efficiency all the time. How do we squeeze more out of our assets? Expect to see continued cost reduction from our operations in the years ahead.
The other is to enhance client experience and access. Vedanta Aluminium has launched the Metal Bazaar, the world's largest online superstore for primary aluminium products. The bazaar offers a seamless aluminium buying experience, from real-time AI-based price discovery to end-to-end visibility of purchase.
Right from the beginning of the process, price discovery, understanding the offer that we have available, negotiating contracts, concluding whether it's a long-term contract or a spot contract, and all aspects of the manufacturing process all the way through to delivery and reconciliation. We think it's a fundamental change to the metals industry.
While cost efficiency and better customer support remain crucial, Vedanta Aluminium is keen on expanding capacity to meet rising demand. It is looking to increase the production volume for molten metal from 2.4 million tons to 3 million tons and is expanding its value-added product capacity from 1.4 million tons to 2.6 million tons. But this cannot happen overnight, meaning the company expects aluminium prices to rise in the medium to short term.
Every point of growth in GDP will result in 2 points of growth for aluminium. So if we think of a high single-digit growth in GDP, metal growth should be in the high teens, and that's very, very good for our business. Supply will be constrained and prices will increase as a result.
Vedanta Aluminium is also banking on the 3 new logistics rail corridors India is working on to ease supply bottlenecks and boost growth. While Vedanta Aluminium is looking to increase its price realization, it expects global prices to increase in view of supply constraints. However, the company is confident of achieving the target of 30% energy through renewable sources by 2030. In Jharsuguda with video journalist H.K. Patra, this is Abhimanyu Sharma for CNBC-TV18.
All right, on that note, let's slip into a short breather on Business Lunch for now. But remember that farmers continue their Delhi Chalo march after they failed to find a common ground in their second meeting with the union ministers. More on this when we return. Stay tuned. Welcome back. You're watching Business Lunch. Let's take you through one of the big developments in the national news today. And let's get you the latest update on the farmers' protests. Now, farmers from Haryana and Punjab continue their march towards Delhi after the second round of meeting between the farmer union leaders and union ministers ended in a stalemate. Now, Haryana police fired rounds of tear gas as the protesting farmers tried to remove the barricades. A number of farmers and their vehicles were also detained at the border by the Haryana police. Now, in fact, my colleague Abhimanyu Sharma is joining us with all the updates at the current moment. Tell us, Abhimanyu.
Higher MSP, higher compensation under the Land Acquisition Act, India's exit from the WTO, and higher compensation for families of farmers who lost their lives in the previous farmer agitation. These are some of the demands which have been raised by the protesting farmers, even as the government is constantly engaged in negotiations with them. As many as 250 farmer unions have said that they are going to carry out a protest march and they are going to enter Delhi in large numbers. Now, the vigil has been stepped up not just within Delhi but also in the states of Haryana, Rajasthan, Punjab and Uttar Pradesh. Clearly, all state police departments have stepped up vigil and have increased the police presence across state borders. All state borders of Delhi, as well as several other neighboring states, are being constantly monitored. Barricades and boulders have been installed to prevent an influx of a large number of protesting farmers, even as the government remains constantly engaged in negotiations with the protesting farmers.
All right, Abhimanyu, thanks a lot for getting us all of those details. We're going to keep bringing you updates on this story through the day, of course. But right now, we have to wind down on this edition of Business Lunch. From the entire team, thank you for tuning in. We have Midcap Radar up in 2.